Hello everybody, welcome back. So front running it by 1 minute, I hope you don't mind. I know some people don't take too kindly to that kind of thing, but it's only 1 minute, so I thought I might as well. So, as I was saying on my video yesterday, I got algo up for that guy. So, as I was saying on my video, I was expecting this to run up perhaps maybe a little bit more, and I kind of still am in a way. Could potentially run up further than a 10 exponential, but showing the pressure is still to the down. The fact that we got rejected on that 10 exponential on the daily suggests that the lower side of the range wants to be tested. And even though this is the outside zone that I was speaking of, it does lend itself to the concept that and brace yourself, right? Brace yourself. We do have the death cross, and we do have the short signal on the Ichimoku cloud. So technically, if you were looking at this in the opposite way, if you flipped this screen upside down, which I know there is a way to do, but I can't remember how to do it, then you would be thinking, oh, this is exciting stuff. This is the sort of thing I'd be looking for. I'd be looking for a long position if this was an upside down chart, because this is the sort of thing that we look for generally the opposite way around for going long. So we have to think about what it is that we're seeing, and we do see pretty much a short signal, to take place, which is why I've cranked out the rolled out the old leverage trading again, because on Tuesdays and on Thursdays I pretty much the whole day to myself really now. Kids are at nursery and stuff like that, and I'm thinking, that's just, I'm a little rusty around the edges, when it comes to the shorter term time frames, but at times of extreme volatility like this, and with setups kind of like this, it's rude not to. And I'm only talking about scalps, right? I'm only talking scalps. I'm not a massive derivatives or leverage trader. I'm not really a massive fan of it, but sometimes, especially when like I say, when price is being respected, price action is respecting these moving averages and generally the direction of the trend pretty well, it's worth sometimes just doing a little scalp. So, but again, I'm not a massive fan of it, so I'm not trying to promote it to you guys or anything. I'm not one of those YouTubers that tries to thrust, derivatives down your neck. But if you did want to try it, I would suggest, not that it's the best platform in the world, but Bityard. There is you can practice on there for free. As in, like, you don't have to use any money, and there's like a demo account that you can practice with, but it's not the greatest exchange in the world. And it's all Tether. Now, in downtrends, this is just something I thought I'd mention. In downtrends, in potential bear markets, my preference isn't at this point to use really Tether. In coin, I prefer coin futures. You can do that on Binance, and obviously Bybit is the main one. Because I believe that this is going to turn around one day, I would prefer to, with the coins that I like Bitcoin, XRP, EOS, and I suppose Ethereum. They're all there on Bybit, and I suppose you can view it like accumulation, really. If you, like I say, only if you're able to do it. I'm really trying not to get you guys to do leverage trading if it's something you've not done before or anything like that. I would certainly suggest practice for a long period of time until you understand how easy it is to wreck yourself. Because I honestly I know, and then this is why I don't talk about it very often, and I don't talk about it at all really on my general videos. But I don't mind talking to you guys about it, because obviously you're all quite serious about what it is that we're doing here. But I know for a fact, it's a statistical fact that it's the 90-90-90 rule. I think I've spoken about it before. 90% of people lose 90% of their balance within 90 days. And that's a sad fact. And any of you that have used derivatives, you probably could maybe even relate to that. I've lost loads. When I was learning not so much learning the indicators aren't often the issue. It's the risk management is mainly the issue. It's not really about your understanding of how to trade a chart. I found anyway, and that's usually what makes or breaks somebody who wants to trade. You can learn everything you need to learn, and you know what you need to do, But when it comes down to it, you just can't do it, if that makes sense, you know? So it's one of those things. And I was subject to that for a long time. No one wants to take a loss, but sometimes you have to take a loss. And the idea is to nip the loss in the bud while it's small. So anyway, yeah, enough going on about that. But yeah, my preference at the moment is, I'm looking to do some leverage trading using coin futures. And because I do love Binance, obviously I do love it, but it has on occasions gone down at crucial moments. And the last time that, if you're trying to trade volatility, and we all know what, I don't expect it to happen. To be honest, I think that hopefully they'll have got their act together. But yeah, sometimes when everything's going on and everybody's piling on and using the platform or whatever, it has gone down in the past, which is absolutely horrendous thing to happen if you're using leverage, because you can't get out of that bloody trade. You know what I mean? I've chosen to go with Bybit for the most part anyway, because I'm only really doing it with Bitcoin. Really, I'm not trading multiple things, but I do have a load of XRP in there as well, because you know me and XRP, we go back a long way. And what I will also be adding is when EOS comes down to hopefully towards the $2 zone, I'll be buying a load and banging that into coin futures too, because it'd just be rude not to, really. So that's enough of that. So yeah, I am back on the old leverage, and it's mainly because I have a bit more time. But I certainly am a little rusty around the edges, so I'm not taking too many chances or anything like that. But that's that. And so if you want to know more about that kind of thing, not so much about how to do it, because I'm sure you all know how to do it, but we can look at examples on short-term time frames, and we can try and I suppose adjust the knowledge, and I'll show you what it is that I look for to take a short or a long or whatever it is. But I'm not in any way suggesting you do it unless you're very comfortable. And if you want me to shut up about it, I will, because the last thing I want is for anyone to get wrecked trying something new. And if it is new to you, definitely set up an account with Bityard, and just practice. To my knowledge, that's the only place that does have a demo account that you can practice with. But it's been a while since I've used Bybit. Anyway, I've not used it in feels like over a year if not used it, maybe even more. So everything's changed. I loaded it up and I was like, this looks better than it was before. Never mind. Right, so let's think about the price. So yeah, what I was saying is overall, this is a nasty looking chart, and on the daily term time frames, it would lend itself to further downside. But just as I've said this entire time, sometimes we can have a setup like this and it gets blown through the roof, which is why I'm trying to stress, if you do want to use derivatives, just be very, very careful and mindful about what it is you're doing. And me personally, I'm not looking to go in any longs or any shorts for any prolonged period of time at all. Like, pretty much in and out, to be honest with you, a couple of hours maybe. But yeah, it's not looking particularly good. Now, given, I've been looking into the whole Wyckoff distribution and reaccumulation and things like that, and yeah, I mean, I never really think about things in those terms. I trade strength of trend and other a completely different way of trading, really, to Elliott waves and all that. But I mean, it's so obvious now looking back at it, but that's what it was. Maybe I should try and expand my knowledge of Elliott waves. It's been years since I tried to understand them, and maybe it's just me that it never really seemed to work. Every time I tried to get my head around it, it never really worked for me. But this one does sort of look pretty textbook, and so if that's what it does lend itself to the idea that we might be approaching a bottom zone, right, and that there would be what's known as the spring. And if that is the case, this probably isn't it. Because this, in my opinion, is still the range, and so the spring would be lower than that. So I go on crypto Twitter, obviously, sometimes, and I hear people say, well, that was the spring. But from what I understand of the Wyckoff accumulation, it's the spring should be a lot lower than that. It's like a final shakeout wick. That is basically just in this zone here, and given the fact that we're looking bearish and still technically within the zone that I've marked out, this hasn't scared me yet. I've not been scared by that. In fact, I made a video a week ago when we were approaching 41,000, or maybe when we just hit 41,000, to say that 28,000 is the next area of significance. So it didn't scare me. In fact, it was just a normal day really for what I expected. I think personally, I think we should have a better reaction to what we've had now, just in general. Even though we have been rejected from here, it wouldn't surprise me if we did manage to make our way up to the top of the range anyway. But it still wouldn't be the spring for the Wyckoff accumulation that people keep referring to. The spring should be a lot deeper and a lot scarier, and basically, I suppose, whacks everybody from every direction, So the spring should be nasty, deep, and then fast, and basically just a springboard, really. So yeah, I don't think that's it. I think a new low will come in the form of that spring, and that I'm okay with that. If we go quickly to, and I'll get onto your messages soon. If we go quickly to the overall weekly, we're still hanging on that weekly, and remember it's about the weekly closes. We're still hanging on to that 33,000 ever so slightly, just about, on the weekly. Remember, this is candle body closes that we're looking at here. If we start closing below here, okay, we can entertain the idea of perhaps bear market. We did have a similar kind of vibe going on around here, which again is kind of a similar kind of vibe, but it's obviously completely different, where we did spend over a month below it, getting rejected from it. This is pretty scary stuff, and this is the kind of spring that I suppose that I'm referring to. Really, I remember this happening, this double bottom forming, and this was a big spring. This happened all in more or less in a 24-hour period. I remember people on my Telegram sort of praying for me to make it stop, because it caught them off guard. So we had the bottom here, and then a double bottom here, and then pretty much a nice rally, I suppose, after a few days. But this wick looks deceiving, but there's a 16% move in one day. Remember, we've been going down for a very long period of time. People were talking about full retracements, 4, 5, maybe even $3,000 at a time. People just thought that it was over with, because it had been going on for such a long time. This had been going on for about 6 months at this point. It's a long time. Yeah, a good 6 months basically, and actually, when you think about it in terms of percentage loss, not that bad really. But it was for a lot of people, because a lot of people had only just got into the market around here. I don't know how long many of you lot have been around, but not many people would have wanted to be in here. But when this area got reignited, it's similar to how this area felt, for new people coming in. Oh, here we go, oh, Elon Musk, whoa, it was kind of like that. Bitcoin was all over the place. Bitcoin exploded all over the place, as in like social media and news and everything like that, because it was a change of behaviour. The bottom was in, and then not only was the bottom in, because no one really cares when the bottom's in, generally speaking, not after a year-long bear market. No one really cares about that particularly, but what they do care is when the behaviour is officially changed and starts to rally, which is in around April. I think it was April the 1st, wasn't it, from what I remember? Yeah, I think it was. April the 1st is when things really start to kick off. And then, new retailers entered the market, everyone getting super excited, then, whoa! And I remember the panic. But yeah, this is the sort of double bottom kind of vibe. So that could be this. I'm not saying this is how it's going to be, but this could be how it is, as in yesterday's move. And then we could find ourselves finding something like this. But I imagine it would be deeper. And how deep, you ask? Well, I couldn't tell you, but enough to make you scared. Definitely. I'm not massively bearish, I have to say, but I am bearish in the short term, certainly. It's not looking good. But we've come down, 55% so far. If it comes down, how much more do you think it could come down to? If we measure it down, it's easy, I suppose, on the weekly over here. If we measure it down to the 200 exponential, I will get onto your things from pretty much where we are right now. 200 exponential at this very moment in time is another 49%. This is a weekly, so it's a lagging indicator, but it is still moving up. It's going to move up until we go below it, so, and even then it'll still keep moving up until it snakes over. Yeah, it could happen. Let's face it, it could happen, and that is what, 16,000, 17,000. That's also a breakout area as well. So yeah, I mean, it could happen definitely. But what's another 50% among friends? Do you know what I mean? If we're planning for it, if we're expecting it, or if we put it to the back of our head, but recognise that it's still a possibility, then it shouldn't take us by surprise, and we shouldn't be overall shocked. And remember what I always say about Bitcoin: bear markets take a lot less of time than bull markets. Bear markets are about a year long. I know people refer to the entire thing as a bear market, don't they? I suppose it's only a massive bear market if you bought the top, I suppose, and then it'll feel like a bear market for 3 years because you're waiting a very long time to get back into profit again. Bear market, in real terms, is for Bitcoin is 12 months generally. But that's for those who buy the bottom, you know what I mean? And then you go into a bull market. So technically it goes up for 3 years and down for 1 year. That's how it's always worked in the past. Even if it doesn't do that, it spends the vast majority of its time going up in comparison to what it does going down. So, like I say, it'll feel like a bear market to the people who bought the top, certainly, if we do go into a bear market. But for those who still have capital in reserve, waiting to buy or consistently buying on the way down, and playing the game basically, which is what it is. This game, shorting it, longing it. If you've got the skills and ability and discipline to do that type of thing. It's the bear market will. If we go into one, the bear markets are over before you know it, really. Before you know it. And the bull market lasts for a good 3 years generally. So that's all I need to say about that. Let's have a look at some of these comments and we'll go through what we're going to say. And I'll tell you what, I'm going to open this to the public, but I don't want it to run on for too long. But I'll just open it up in a bit. So if everybody leaves their comments in here, that's great. Right, let's open this bad boy up. I'll only do this every now and then. I just thought I'd open it up today. And just a word of warning as well about the Patreon thing. Not this week, not next week, but the week after that, I'm going away with my family. It's one of those UK holidays, I go on holiday in the UK, and not because of COVID. It's just that this is what I always do. So, we've got a relative who's got a caravan, so we go to it. I know it sounds rubbish, and it is kind of really, but the kids like it. Going on a caravan holiday, and so I will be able to make videos, but when it comes to the live streams, I'm going to have to drive to somebody I know that lives not too far away. It's a good 20-minute drive for me, and I will be able to do the live stream there, and I'll be there for 2 weeks. And so rather than imposing on their house, especially between 8 till 10 at night, twice a week for 2 weeks, I was thinking for a period of 2 weeks, only 2 weeks, I'm going to do one live stream a week. So let me know which day you would prefer that to be on, and I'll do it. So, and it can be any day. It can be any day, honestly. But it's just going to be for a 2 week period, and then we go back to normal. But bear in mind, that's my little holiday with my family and stuff. And I will still make videos on YouTube anyway on a daily basis, because I can upload my videos by tethering my phone. But my phone just cannot handle a live stream. Just can't do it. So yeah, unfortunately, you'll get only one live stream a week, just for 2 weeks while I'm away. Right, where are we? Hi CC, do you think algo to BTC pumping coming like the one that happened a few days ago? Personally, I don't see it moving outside of its own, outside of the altcoin market, and we'll get Bitcoin up as well. From my understanding, the reason Algo did that pump was something to do with CBDCs, some kind of little insight. I don't put my ear to the ground too hard, to be honest, to understand what it was exactly, but it did do a big pump, but it was sold off pretty much immediately. Those things usually are some kind of tweet or something along those lines. So that wasn't really relevant to the chart itself, and so I wouldn't be expecting anything like that to take place again on this chart. Like, I want Algo to pump because I've still got my bot on. I'll show you it now. It's still running, still ticking away, but it's going to have to get closed pretty soon, I think. I mean, it's done well. It's done all right for it. So 25%. So that's not too bad, you know. So, but it's but yeah, I don't see any reason for it to pump on its own. I just don't see that. If we're looking at the Bitcoin pair in here, I mean, we're getting pretty nasty looking candles now, forcing its way down. I mean, it's still relatively sideways, which lends itself to a bot, but unfortunately my bot moved itself up a tiny bit after the pump, so the grid's kind of moved up a little bit. It's hard to say if it's going to break down on the Bitcoin pairings, but I can't see it moving up. Now if we go over just quickly to Tether pairings, we're below all major moving averages at this point now. Fresh short signal over here, which you could argue might have already started to play. I don't see, there's nothing bullish about this, unfortunately, not yet. And if it carries on like this, we will incur our own death cross on Tether. You know, if we fall at the same speed as Bitcoin, that would be nice. It'll keep the algo to BTC relatively static and stable. I mean, if you think about the way that this chart looks, I mean, it's actually not too bad. I mean, it's pretty devastating, but it's not too bad in the way that it's still been sideways, and that's why it's lent itself so well to the bot. The bot has worked out quite well for it, but at this point now, it's dragging down further than Bitcoin, so it's not doing itself any favors. And that pump that you're referring to, I'm pretty confident it was got something to do with some kind of, someone told me, and it wasn't mind blowing, but it was enough to cause a pump. It's not like they are now the digital dollar or something like that. I think it was just a matter of, it was something that to me sounded just standard, you know, oh, that's what's caused retailers to pump into it or whatever, but I can't even remember exactly. I just know it's connected with CBDCs, which is why I'm okay holding it still anyway. I like to hold anything that's connected to CBDCs, just why not? Do you know? Why not? It's coming. It's definitely coming. As to when it comes, I couldn't tell you, but does appear to be a race to get it sorted, and I think that Algo is actually one of the front runners now, to not just to be, you know, the main CBDC, but to be a main player in it. So yeah, I don't see anything special taking place there, unfortunately. Right, if everyone wants to give it a like now that we've opened this to the public, that might help me. And actually, you know, I need to start asking people to subscribe, especially when YouTube channels are just not getting watched about crypto these days. If I'm going to survive this, I'm going to have to sell my soul and tell people to like and subscribe. I feel like every time I say that in the past, which is probably, I could count it on my hands, I kind of feel like throwing up in my mouth. You know, it's not really something I like saying. But I suppose I've got to do it. Right, hey CC, do you think it's worth putting in a spot bag of BNB on a bot? I've set XRP, VET, Bitcoin, big bot. Okay. Yeah, well, I mean, to be honest, well, it depends what you mean. Is this going to be a bot versus Tether, or like other cryptos as trading pairs with BNB? Because the problem with BNB is it's so unpredictable, as in, like, it's volatile in its own self, which is good, I suppose, but I had to stop using it as a trading pair because it outperformed pretty much everything after. And I did try and link it back up again after it did its first big pump, and then it just did another big pump, and it's just too unpredictable for me to use as a trading pair in a grid bot. So I'd probably say you're probably better off just holding it, in all fairness, unless you can establish a range. But if we're going into downtrends across the board, and BNB appears to be one of the stronger altcoins, especially if you look at it today, I mean, it was over 20% at one point in its bounce. Not many other altcoins would have done that, which meant that most altcoin pairings versus, you know, BNB would have been in a downtrend. I mean, let's just have a look at a random one. Let's have a look. What did Algo to BNB? So it's down 4% today. So yeah, this is what I mean. I just feel like it's neither here nor there. Like, this is just Algo. It's probably not the best example, but I mean, it's sideways. Definitely, it is sideways. I suppose that's what Algo is. I suppose sideways. So small range. I don't really feel that I would probably say no. I think the only things that I would be confident in having a trading range bot in, and I know I'm holding on to my Algo to BTC trading bot at the moment, but it is looking like it's going to have to get closed pretty soon. The only problem I've got is that we are in downtrends with them, and unless you're doing like a tether pairing, which I guess is boring, or maybe even just a fiat pairing, you know, which I guess is obviously boring. I think I wouldn't be confident doing it myself, because I just don't know what BNB's got around the corner. Do you know what I mean? It pumped massively, and I suppose I've just got bad vibes about it. I mean, look, it worked out really well for me. That's how I managed to get the $1,000 to $50,000 in 4 months, is through doing it with BNB. But you know, you couldn't achieve that sort of. I don't think that could be achieved anymore. That was I think that was a one-off type vibe. Hey CC, evening all. What's your preferred way to transfer funds from different exchanges? Well, it's Tether actually, with the Tron network. It's pretty fast. I mean, usually within a minute, and it used to be completely free if you're doing it with Tron. Don't do it with Ethereum. But yeah, the Tron network, USDT. I think they only charge, most exchanges will charge you like a $1, and it doesn't matter if you're transferring, you know, 100 or 10,000 or what. It should still be $1. I mean, each exchange, I suppose, is a little different, but it's definitely fast and it's cheap, and that's all you could care for. I used to previously do it with XRP until I realised, and I only realised that like a year ago. I was like, oh right, Tron network is free. It used to be completely free to transfer tethers. Now they charge $1, but my understanding, it's $1 regardless of the size, and it is very fast. You know, people slag Tron off, and you know, fair enough, but yeah, it's definitely fast. Evening, kind sir. Well, that's very nice. Can you check Doge? Right, okay. Also, would you pay for Hypertrader, having used it for a few weeks? Well, you know what? I think when I'm saying I'm looking to start trading on the short-term time frames using leverage and being more active, because I've got at least 2 days of the week where I'm able to do that. And if we've got volatility, then there's price action to take advantage of. Then I think I probably would trade it, because you can link all kinds of exchanges to this. The ones I would generally use. You got Binance Futures. You got Bybit. You've also got KuCoin. I'd like them to have Gate.io on there, but Gate.io and KuCoin are more or less the same thing. I prefer Gate.io to KuCoin, but the coins that I trade on Gate are all available on KuCoin, so it just might mean that I transfer them over. The whole thing's like really fast, and I like the fact that it's fast. It's faster than using the Binance platform anyway. And I like the way that I could just go from one exchange to another if I was an active trader. If you're not an active trader, as in like this isn't you don't do it all the time, then I suppose it doesn't really warrant you doing it. And it also wouldn't warrant you paying for it if you only use one exchange. Do you know what I mean? So I mean, what's the point? The whole point of this is for it to for use of ease. Do you know what I mean? So I can access KuCoin, low cap, mid cap, micro cap coins. I can go to coin futures through Bybit. I can then go to Binance and manage all my spot trades, and I can do Binance futures. It's all there just on one platform, which is so far pretty fast. Yeah, it's pretty fast, and that's one of the main things I like it. I mean, I'm using it on these live streams. Not so much, it's not as relevant now, but about a couple of months ago, people wanted me to look at things from KuCoin and on Binance, and it was a real pain in the ass, and I felt bad for people because I was saying, you should tell me in advance. I can't look at your KuCoin chart because KuCoin is actually really rubbish on a web browser. It's terrible. It doesn't save your indicators or anything like that. Nothing's saved. Every time you load up a new coin, you have to input all your indicators again. It's just a laborious, painful task. But this basically, one indicator, you set all your indicators and they're transferred onto all the exchanges straight away. So it would be beneficial if you use those exchanges, obviously only these ones that are available. If you use any of these and you use multiple ones and you want to be able to trade all of them fluently, then yeah, that's why it makes sense. there's all these other little perks, you know, like every time I set this up, I don't log in. I get all my things out because I don't want you guys seeing everything. But there's a certain amount of transparency I'm prepared to show with my bots, but not with my absolutely everything. But look, your portfolio balance with everything would all be there. All your reports of everything, all your trades would all be there. I don't even know what that exactly. Oh yeah, it's just an overview. Then you've got your news outlets, which is pretty in depth, really. I mean, you could, if crypto's your thing, you could spend all day on this, just trading, and then while you're waiting for things to get tagged and hit, you can just float around, reading all the rubbish that gets printed about cryptocurrency on a daily basis. And that's just the latest. You can look at, and it's pretty in depth when it comes to this side of things. You got every little possible sub culture of cryptocurrency, all within the news feed there, social media platforms, and so on and so on. So look, it is good, and the more I've been toying with it, the more I do like it. But it wouldn't suit everybody. It would suit those who trade more actively. And obviously if you use multiple exchanges. But I do like it. Yeah, I do like it. I will continue to use it. There's no reason not to, really. It's faster than the Binance app, as in like the desktop app. So if it's faster than the desktop app, yeah, we might as well use it. So, but yeah, I'm looking to do coin futures with Bybit, as well as using Binance for spot trading and futures trading as well. So might as well. It works for me. But like I say, it's quite cheap anyway. It's not massively expensive. I think it's $30. I think it's $30 a month, which if you're trading, especially with crypto, I mean, $30 a month is pretty. It's quite. I mean, I don't want to speak for everybody, but $30 a month isn't much for that kind of fluidity of trading, really. And you do get 10% off if you use the link that I've got. I think I've got the link, but it's not a link. It's you can use it. You can. If you set up a Hypertrader account, you can download it for free, and I think you get 3 weeks for free, so you can play with it yourself, see if you like it. And if you did want to buy it, I think you write in. You'll have to look in the description. I think you just write in the promo code CryptoClick, I think, and you'll get 10% off forever. But yeah, it depends on what type of trade you are. Yeah, let's do some short-term scalps. All right, so yeah, okay. This will be a basic overview. Let's go to Bitcoin and we'll have a think about what it is that I'll be looking for to scalp this market, really. So I always start from the large term time frames. So you've got to work out what is the overall big picture. What is the biggest move? Because if we're looking to go long or you're looking to go short, first of all, you want to know what the biggest move is likely to be. Scalping is all very well and good, but would I want to go long from here? Or would I want to go short from here? I've already established that we've got pretty good short signals on the daily time frame, which would suggest downside. But in the short term, here is no place to take an entry on the daily because it could go up, could go down. We're in no man's land in a bearish zone. So overall, it's bearish, but entry points right here, not really, because if you think about where we are right now, 33,000 is a mega support on the weekly. It's the mega support, right? It's the green 50 exponential. So what we've established here is that there's no place to take a trade here. This isn't a place to go long or short. It's right in the middle. It can go up to here. It could go up to here. It could go down to here. It's no place at all. We're right in the middle. Right in the middle. So what we really want to do is, the best thing to do is to, and this is why day trading is so boring, unless you've got the patience for it. And I suppose having all that news to go through on Hypertrader it's probably what it's there for, to be honest with you, because the vast majority of your day, if you're looking to do leverage trading as a day trader, is going to be sitting around twiddling your thumbs, anxious, waiting to make a trade, and having to talk yourself out of it half the time just through sheer boredom. So most of it is about waiting. So the best thing to look at would be the daily time frame to start off with. Now, yesterday when we got this, I did enter a long here because it's the obvious place. I mean, this has been marked out for a very long time for me, for ages. It's been marked out for a very long time. So this was the obvious place to go into a long, and I did do a long, and it was quite a high leverage one. I posted in the Telegram. and it was because it's been marked out and I've been waiting for it for ages. Like if I was sitting around day trading waiting for this to be tagged, I've been waiting around since probably around down here. Weeks have gone by before it got hit. And finally it got hit, the long got taken. Closed the long at 33. Actually, I closed it a lot before then, but I wanted to make sure that I was out before 33 just in case that was rejected. Now, today, on the video that I made this morning, I said, look, let's face facts. If we're going to get rejected, the first place that it's likely to get rejected is on this daily term time frame on this 10 exponential moving average. So what I would do if I was looking to make this trade, as in like a short position perhaps, is that I'd recognise that, okay, so we've got just short of 35,000, give or take, so we've got 34,900 on the daily, and I bring it down a step to the 4 hourly. Is there anything around there, around that price action? And I'd have a look, okay, this green 50 exponential, okay, so that also marks off around about 35,000, give or take. So we've got two areas of significant confluence. We've got the 10 exponential on the daily, we've got the 50 exponential on the 4 hourly. These are both strong areas of resistance, right? So this would be an area to short from, okay? Then what I'd do is I'd bring it down again to the hourly, and again, this is only something you'd use for derivatives, what I'd do at this point is I'd start to look at the MACD, the RSI, and the money flow index, and I'd look at these for clues of weakness as we're going up. Because remember, you don't want to short just blindly. You want to short at resistance. We've also got this 200 exponential floating around again just above 35,000. So 35,000 is going to be most likely the strongest area to get rejected from this move, yeah, and this move was a bounce really of about 20%, so it had to come down at some point, and there's on three sort of relatively strong time frames there. You've got the daily, the 4 hourly, and now the 1 hour, all point to 35,000 give or take within a few $100s, right? So now what we'll be looking at is areas of weakness. So what we see here is that the MACD is starting to converge from around about this area. So you can see the histogram is ticking down bit by bit, showing weakness. We don't necessarily have to wait for the cross, but you can see when the cross happened. This is where most people will be jumping in on it. But we're seeing momentum slightly shift all the way from back down here, and so we've been seeing it. Okay, so it's curling, and yeah, so we more or less peaked the top of the Bollinger Band, give or take, 34,900. Three areas of confluence with major moving averages on those three time frames. This short, if this was to be taken, I would have closed it by now easily. Even though there's plenty of move to be had to the down. I would have closed it by now. I wouldn't have got greedy on this one because, again, 33,000, whether that's being played as resistance or support, is still pretty strong. So I wouldn't take the risk. Then, before I'd even take the short, I would have a look at the 15-minute time frame, have a look how that looks. So again, this one showed even more weakness on the 15-minute chart. So that's where we were rejected from. And remember, look, we've got no moving averages above us here. The three time frames that we've already gone through already had confluence of three time frames with three major moving averages all pointing towards the same area of resistance. That suggests if it's going to go down, it'll go down between 34,850 to 35,000, give or take. That's an appropriate short position to take on, and then sail it down to preferably just above 33,000, because that's where some serious support lies. Support and resistance is always best on the largest term time frames, and like I say, the mega support is 33,000 because that's the weekly here, the weekly 50 exponential moving average. So what you see me doing really is working out, what is my range, why is my range there. This is the support now because we were above it, and the resistance was proven to me on three time frames, working my way down. And if you really want to get the best entry possible, you use the 15-minute chart for an appropriate place. So we're thinking about it as in resistances, remember. So our resistances was 35,000. That's what we would be waiting for. And then this move outside of the Bollinger Band, I suppose, didn't quite get it, but it was close enough. And then what you would see is, okay, we've made it there outside the Bollinger Band. We're breaking down here. I probably would take the short once I saw the breakdown, and then the resistance here, and the short would have been taken probably on this here, because we've broken down. The 15-minute chart has proven that we're below the center of the Bollinger Band. We're failing to break above it, so one of these three probably would have taken the short on the center of the Bollinger Band. And if you think about what this means, right, so if you think about it by looking at it, let's just say we took the short on this here, so the Bollinger Band was hit. That means that for a small period of time you would have had a negative position of 0.33%. So if you were 10x leverage, you'd be 3% down. You have to trust yourself with your analysis, right? You have to trust what you see. Everything pointed to the fact that the resistance had been tagged, and that we were probably going to come back down to potentially 33,000. And again, it's easy for me to say all that in hindsight, but if that was the case, was 33,000? Was that tagged? Yeah, it was. We went down below it. I would front run it, and I'd also be looking at this on the 15-minute chart. But that's not a massive. That's not massive if you think about the move. So let's just say we did it to the bottom of this Bollinger Band. Let's just say here. That's where we closed our short here before this big wick down, just around here, or maybe even the 200 exponential on the 15-minute chart. We're talking about scalping here. We're talking about planning a trade using decent leverage. If I'd have done a 10x from there to here, 2%, 2.2% is now a 22% trade just with a 10x leverage. It's relatively safe. It took 3.5 hours, 3 hours 40 minutes for that trade to play out. That's how I would do the scalps. You know what I mean? That's how I would do the scalps. To be honest with you, thinking about it, this is where I would have closed it here, so it would have taken even less time. I would have closed it around here. So yeah, we're talking about less than 2 hours worth of price action, 22% on a 10x leverage. Obviously, the more leverage you use, the more amount you get back. That looked, just from recounting it back, just like I have just done then, I know it sounds simple, because it is in a way. That's how you do it. You start from the largest term time frames, you look at what could be support or resistance, bring it down another bit. Is there support or resistance at the same place? Bring it down a bit. Is there support and resistance on it? Yep, yes there is. And then get your entry point, closer to that resistance if possible. If you don't get the resistance, like we didn't get it here, we were just we were front run here. Then don't FOMO. In the opposite, don't go. Oh, I missed it. Because no one knows what's going to happen. Then you wait for areas of weakness to be more apparent on the 15-minute chart, and the weakness was more or less confirmed as we failed to break above the Bollinger Band here, and on this one we dumped right down. So yeah, it would have taken just short of 2 hours to get a 2.5% move, and then depending on how much leverage you used for that, and that is a scalp. That's all it is. It's a scalp, and you're in and out really within 2 hours. Oversimplified, I'm sure. There's other ways you could look at making bigger, better trades, definitely. And I suppose there could be I suppose it's the best long short positions have already been taken, really. But we do have a short signal, don't we, on the daily and here as well. So a low leverage. This is another way you could think about it. If you're looking to have a longer position and that takes days to weeks play out, then all you really need to think about is the daily term time frame. And the daily time frame at the moment is saying short me, but it's not saying short me here. You could try a short here like we did on that short term time frame, but a low leverage long will take longer to play out, and it means also that you're trying to short at the first opportunity here. If you're doing a longer term time frame one, you really want to get up at the higher term time frames, because you want to be able to sleep at night. You don't want to be holding shorts or longs even unless you're absolutely 100% confident of your position, because anything can happen. You will not be able to sleep. You won't be able to sleep if you're holding overnight positions. It's just a nightmare really, for me anyway. And I can't sleep these days anyway because of these kids. But the last thing when I do get to sleep, I just need to put everything needs to be done for the day, and I don't want any longs. But if I was to do a low leveraged long, I would wait for a much better opportunity, because low leverage is good, it's safe. Well, it's not safe, it's safer, and it's less stress, should I say. But your entry point, you got to be looking for a bigger move. And so if I was to go into a short position, I would be shorting it from here. I would be hoping for the best and shorting it from here, 40,000. It seems unrealistic that we'll get up to there anytime soon, but we could, and if we did, it would be 2x long, 3x long max, and I'd be looking to sail this one down to this area where we could potentially have the spring, that we're talking about, the Wyckoff spring, which, God knows when it'll be, if ever. So they're the two ways you'd be looking at doing, I suppose, longs, and especially the short-term time frames. That's how I would do it. Hopefully that was okay and that made sense to you guys. Let me just see. So there's still some people watching, so it must have made sense to some people. Otherwise, I'll be looking for less people watching. So we've done that. You want me to look at Doji? Sorry, I'm skipping all over the place here. Let's have a look at that then, shall we? Right, 14% today, not too bad. Right, okay, so thinking about what I'm seeing here, looks like a head and shoulders with a broken neckline here. So support broken, turned to resistance. What we really would need to see would be why is that looking so weird? What we'd really need to see would be for this to break here to 24 cents. 24 cents needs to break to have any kind of savage uptrend. We're pretty much on this little baby here. What's this? The 200 simple moving average. Last level of support really before it breaks down completely, and if it does break down completely, it'll break down to its breakout zone probably around down here, like 7 cents, which sounds horrendous. Let's bring it down to a smaller term time frame. But again, this is one of those things which is just going to have the life drained out of it if with the rest of the market, if the market continues to go down. This will be the personification of horrendous horrendous spot holds, really, for those who are in at the top. So far 70% from its bottom, 77%. If we come down to the breakout zone, we're talking a 90%. That's not unrealistic, definitely not unrealistic. We're talking about Dogecoin here. It should never be up there in the first place. I mean, look, it's a tradable chart to an extent, definitely. The volatility, the volume, it's all there. Look, 1.2 billion 24-hour trading period. Plenty to be made in here. But for the moment, the head and shoulders is broken down beneath this the shoulders here. So there's nothing good about it for me personally. And if we think about what we see here as well, this was your short signal for a short, a small leveraged position. The conversion baseline cross beneath the cloud, Chiku span beneath price action, and obviously the price action down here. So far that would have yielded from the top of there to down here 50% from that short signal. Right, this short signal here is still in play. It's going to be in play until we see this Chiku span touch the price action, or for the blue to cross the red in the opposite way. At the moment, this is still a short position that, it's a short signal that's still being played out. And given how we got rejected, particularly on this area of support, rather than even coming up to the 10 exponential, suggests that it's weaker than anyone could probably even imagine, because it's not even touched the exponential. It touched the support. Couldn't handle it. Look, Dogecoin can pump again. I'm hoping Elon Musk is just going to keep his mouth shut from now on. Alright? I mean, I just hope he is. Because a lot of this pump, some of it was traded. A lot of it was FOMO. And when you get anything that gets FOMO'd into, it's not sustainable. It just is not sustainable. There's nothing about Doji that is a sustainable. It's just not sustainable, if that makes sense. Every time he tweeted something, it pumped, and then just as it was dropping off again, something else got tweeted and it pumped. And you got all, I don't know if anyone ever saw these people on their TikTok. I saw some clips of some bloke saying that Doji's going to take over the price of Ethereum. It says, you might think this is unbelievable, but it's true. The rate that it's going to eclipse Ethereum. And I was like, oh my god, some people are going to get seriously damaged. This guy was like a big influencer on TikTok. I mean, I mean, it's, you know, I think what happens with some people, and kind of take it for granted, and this is why I usually try and stay away from talking about leverage, because I really just don't want people to use it that have never used it before. You first have to understand what the chart is doing, how it's going to behave. Secondly, you need to have the discipline to be able to do it, and so many people are just going to get completely destroyed in the market anyway, just even if it's just spot trading. You don't need to. I often feel as though you really just do not need to have leveraged capacity on cryptocurrency. I like it for shorting purposes and for longing purposes occasionally, but you know me, I rarely talk about it. I'm only talking about it now because it's becoming one of the main weapons of choice. You know, pulling out shorts from my arsenal, I suppose. That sounds a bit weird, but you know what I mean. So I don't talk about it much, and I don't promote it, and I don't wish for anybody to use it unless they've at least practiced on a demo account for a prolonged period of time and understand what it is that they're doing. But poor old Doji can't move on its own. It's not going to move on its own to the up, I don't think. Not with this kind of setup. It can be volatile. Obviously, there's a nice move it's had today. But it's all part of the relief rally. Just look at this dump here, just from there. That was a 41% move in a day, and in my opinion, it's probably just the start. Right. Sorry, I skipped you there. So we've done that one yet. How low do you think XRP will go within the next few days? Well, that's such an open question. It's going to be very much dependent on what Bitcoin does, isn't it, really? But we can look at XRP and try and establish some price ranges, really. I think we've already done that on a video. So let's zoom in nice and close on the daily. So what do we see on the daily? So we had our first short signal way back, which is still technically playing out. We're quite stretching very low below the Bollinger Bands, so it would suggest that, you know, if Bitcoin did come down more, then I think that XRP would come down probably at the same speed as Bitcoin and bounce better than Bitcoin. So I think the odds are in its favours the lower we go. I've marked off this zone here of 42 cents. Reason being, if we go back in time, we can see that there was a prolonged period of time that we spent dancing around that zone, reaccumulating on it basically. And I like XRP a lot, even though it's very unpopular and generally an underperformer. But the main reason I really like it is that it's always respected its moving averages and its previous supports and resistances. In that way, it's very predictable. And so if it did break down to 42 cents, or we'll say between 44 and 42 cents, it's unlikely to break down there straight away, and it'll probably have a massive bounce from there because historically it's a very strong area for it. I bought a load yesterday for, you know, adding into my my Bybit account, you know, because I want to get more of it. It was a decent time to buy it, and use coin futures on it really to try and get as much as possible, because I still believe that it's going to work out pretty well for XRP. And when I say pretty well, I mean $4, you know, minimum top target at the end of its cycle, and it does have its own cycle. So I'm looking towards the end of the year for about $4 still, even now. I know what that sounds like, but even now. And if you're new to this channel, I know that I've opened this Patreon live stream to the public, but if you've never seen anything that I've ever done before, I'm not a moon boy or anything like that. I'm not one of those people that talks about XRP and bangs on about it because I think anything particular about it. But I broke down the chart ages ago before it started breaking out, and I got in on XRP before any of these breakouts, and I made a video about how it's going to work out this year before any of these happened. And they basically, I mean, it's doing exactly what I expected it to do way before it did it, and I expect it to continue to do that, you know, still. And like I say, it's not because I'm a moon boy. It's because XRP is a very old coin, right? It's had a full market cycle, a 4-year market cycle, and that is basically behaving right now the same way as it did last time. So it spends this is one of those coins that does spend 3 years in a downtrend, and then 1 year in an uptrend, and yeah, this is how the chart looked more or less in the previous cycle. And actually, I haven't watched that video back since I made it, which is over a year ago now. But I remember saying that around May would be the first fake out, and which is similar to how it worked previously. We had a big move and a fake out, and then a 70% drop after that fake out, which is kind of what happened here. So if I were to, the future me, as in like me now, went back in time to the me that was making that video like a year to 18 months ago, and presented the past me with this chart and said this is XRP's chart, it doesn't matter what the market's doing at the time, the old me would have looked at this and gone, yeah, that sounds about right, that looks about right, I don't need to look at what Bitcoin's doing, I just look at this and go, that feels about right. Yeah, May as well, it's kind of what I said in the video. I remember it all. I mean, like I say, it's difficult to nail things down to particular months or days or whatever, especially when you're talking 18 months ago or a year ago, whenever I made that video. But I would have looked at this and gone, yeah, that sounds about right. What is 75% retracement, 80% retracement? Yeah, that sounds about right. that sounds about right, definitely. And I expect it to reaccumulate, to be honest, around these zones, you know, for the best part of this year, and then go into a savage uptrend, just like it does when the volatility comes into this asset. A savage uptrend, bringing it up to my target of around $4 by the end of the year. So I know it's a bold statement, but you've got to stick to your original analysis, and especially when it looks like this, which is exactly pretty much what I expected from it before any of it happened, even to the month more or less. So anyway, I can't give you an exact target over the next few days. I'm sorry. Small term time frames are very difficult to nail down and give you price targets, because it is going to be subject to Bitcoin, and so we do have to look at Bitcoin. But given what I've said about what I expect with Bitcoin, is that it's sideways and looking to test lower, at least with just wicks lower. And then we've not even looked at the Bitcoin dominance chart, but it looks pretty horrendous if you're holding onto altcoins. I would be eyeing up areas of about between 42 to 44 for XRP some point soon, coming soon, and probably get a good reaction from it there. But no V-shaped recovery, just an opportunity to buy some more. And if my overall analysis works out by the end of the year, yeah, I'm sure XRP will flutter around, you know, have its ups and have its downs. But if you're buying it around about 42 cents, 44 cents, you know, it's close to a 10x if it works out the way I think it's going to work out. But again, I'm no financial advisor, so that's not financial advice. It's but that's how I see it. To be honest, that's how I see it. So I don't make many videos on XRP these days because, you know, what's the point? Especially in terms like this. If anything, the video I made, like I say, a year to 18 months ago, is the only real relevant thing anyone ever needs to know about. You know, back then, bought into it. You know, that was even before the accumulation. But you know, back then, it's pretty much doing exactly what I expected it to do back then. And that wasn't a video like my normal videos. I made that one like a nice glossy one. I had a bit more time back then. I actually I even had a soundtrack behind it. I was like, yeah. You know, I actually went to film school, you know. So sometimes I do enjoy making a video. It's just now I don't have the chance to do it. Right. Thank you, loud and clear. Collected opinion and collected opening for streaming. I feel confident the way you talk. Well... So yeah, I'm glad. Sadly, I can relate, CC. Once I started a Prime XBT account with only $150 in Bitcoin, traded up to, wow, that's a big deal, $5,000 worth of Bitcoin in 6 weeks. Lost it all. Right. So I don't know how you managed to. I mean, you did. You've done an amazing trade to start with. I think it must be your risk management which was the issue. So we can all relate to savage losses, you know. And most of the time, I think a lot of the time actually, going back to, I suppose, when you say confidence over here, that that sometimes can be your biggest enemy as well. If let's just say I've made, in succession I did 7 epic trades, right? I feel invincible. I've done 7 epic trades. I've tripled my portfolio balance within a week. I am the best trader in the world in my head, and I'm like, yes, there's nothing that can take me down. I've got this absolutely nailed. You know what? Next time I'm just going to pump up the leverage a little bit, and it's the confidence in a way that can sometimes, end up tricking you into thinking that you are the best. Always plan for the worst, and like I say, I mean, most of the time I always say that day trading is like fishing, and you're sitting around waiting for a fish to bite your hook. There's no way that you can rush a fish to your hook, is there? You can't poke the a fish that's swimming around with the hook. That's just not how you do it. You have to wait for the fish to even be interested and take a bite. Get the hook. You're sitting around waiting to catch a fish most of the time. Not that I spend any time fishing, but the theory is the same for day trading. There's always this romance that people associate with day trading, and I suppose I can understand when people think about it as in like financial freedom. You don't want to work anymore, you want to get out of your job. But I tried it. I did it for about 4, 5, 6 months, years ago. Since I got, since I was able to trade, really, I said I'm going to do it. I'm going to be a day trader, and I had to go back to work because first of all I felt so isolated and that I just couldn't handle it. It was just so boring. Secondly, you have this, I suppose, stress hanging over you, knowing that this is your only form of income and that you have to trade. And if you don't trade, or if you're not trading actively, then you're not bringing in the money. So I don't like day trading. I mean, it's okay for me now because it's not my main source of income, but yeah, I mean, yeah. Anyway, I've deviated from the task. I mean, I do make my money through trading, but it's not through derivatives trading or anything like that. I mean, I'm not here to boast about what I've done this year, but if you watch my channel, obviously you can see the amount of trades that have been made, and we've all made them as well. I mean those sort of gains last. They can hold you good for a very long period of time. Anyway, I didn't mean to sound like I'm boasting or anything. I'm not. We've all made epic trades, right? So being able to take a loss and cut out your emotions is mandatory. Yeah, that's right. Definitely. Yeah. Sometimes I think this is what one of the points that I'm trying to make about day trading is that the emotions do run a lot higher when you know that it's your main source of income, and you feel compelled to trade even if you're not confident in the waiting for it. Like I say, you have to wait for the fish to bite the hook, and if you know that you have to pay rent at the end of the month, then you might be swimming around in the lake trying to catch the fish in your teeth. You know what I mean? And that's not going to work. Right. Started in a bear market, to answer your question. Brilliant. Yeah, that's a good place to start, because we can all see and recognize the dark side of crypto, which is what a lot of people don't know. People don't know that. This is the first time some people will be seeing this. They can't believe their actual eyes. Do you know what I mean? Especially with altcoins, they cannot believe their eyes. But you and me, we've been there. We've seen it before. We know the risks. Tuesday would be good. Okay, so we've got one person down for Tuesday. For live stream, I'll suggest Sunday. All right. Okay, we're bringing it close to the weekly close. Okay. I see where you're coming from there about the Sundays. I'll have to think about it because I don't want to impose on somebody's. Because remember, I'm going around to someone's house. They are friends of mine, but they're a lot older than me. So I think they might want to sleep. Around that, going on to 10 o'clock. So I don't know about Sundays. Saturday should be all right. Yeah. It's okay to be a YouTube who every now and it's okay to be a YouTube who are every now and then. Yeah, no, I get all that. Yeah, I it's just because people pay £7.50 for my Patreon, and I promise 2 live streams a week, and for the vast majority of the year I'll be able to achieve that, but I do have to go on holiday or vacation, as probably most people refer it to. So I'm going to have to, for 2 weeks, cut it down just a tiny bit. Do I like Algorand? Yeah, fair point. Yeah, I do like Algorand. Yeah, I like it. And if you've never watched me or my channel before, one of the main reasons I like it is because it's part of the whole CBDC family. So it's one of the only altcoins that I'm holding now, anyway, in the downtrend, because it's too risky not to hold it. That's how I see it, really. It's too risky not to hold it. As far as a project, well, like I say, anything connected to CBDC would be good. Hi CC, what criteria would you use to determine what you should put in a bot, and how long do you typically leave it to run for? Well, a bot is all about a range, right? So it's not about if it's going. You don't want to be getting a bot that's going into a breakout. That's where a spot trade is going to be better. So we'll have a look at this, for instance. This is the bot that I've had running for a long time. I'll just knock the. We'll just bring it down a bit so you can see. So what I saw from this is that there was a range being played, up and down, but slowly going up. Obviously, this is before the crash. So this has been going on for how old is this? 1 month and 19 days, right? So longer than I'd normally hold a bot for. But it'll go on until the range is compromised, even if it is compromised to the up. A lot of the time, if we had a breakout and it was a savage breakout, bots aren't very good at doing that. I mean, they will make some money, but as soon as the uptrend is finished and it starts to go down, I would close it, because all the grid will have moved. But for your question, what I look for is just a range of spikes up and down, 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 up and down. And the reason for that is because all the bot's doing is selling on the way up and buying it on the way down, selling all the way up and buying on the way down. So I just look for a range that's going up, obviously, because you don't really want to you can have a savage uptrend going down, but your grids don't move down, whereas they can move up, but they won't move down. So I looked at this and I said, well, actually, this is a good bot, and it would have been a good bot for a lot longer than I started it. If I started it over here, I could have started it over here, or here, or even here. It would have been great, really, because it was basically getting that volatility, plenty of sells, plenty of buys, over and over and over and over and over again. And technically, it's still doing it now, and I would like to see it move back up again. I'm not too hopeful, and I'm prepared to close it. If it does make another big stab down. That's fine. I mean, it's run for a long period of time. It's done 25%. That's fine. 0.5% a day is what it's doing at, which is basically the minimum that I would expect from any bot. If a bot was making less than 0.5% a day, I probably wouldn't. I'd close it down anyway. It's just not worth it. So that is the answer to your question. I look for a range. I establish a range area, and I let the range play out until it's out of range, whether that's up or down. It stays on for as long as the range is relevant. Normally, bots don't normally stay in range for this period of time. Most of my bots I would ever put on it's unlikely bots will stay in a range for more than a couple of weeks, but this one's done 6 weeks now, is still in the range, so I'll let it play until it's out. So that's basically how I would do it. How much I put in? Well, for grid bots particularly, you're limited in a way to how much you can't put in. You can't put in very small amounts, because each one of those grids is a buy or a sell order. So how many grids have I got here? I've got 29 grids, which means that I know for Binance, which is what this is trading on, you can only have a minimum of $10, right, for a trade-in for a buy or a sell order. So that's the minimum you can have. So for this, if this was a tether bot, I could set this range up with about $300. But this is a Bitcoin pairing bot, so I'm not sure how that would translate. But yeah, you couldn't really you wouldn't be able to set this bot up with less than $300 if this was Tether rather than BTC, because each one of these is a buy and a sell order that's already been placed by the bot in Binance. So if you went to your Binance account, you would see lots of buy and sell orders automatically there, and for them to be there, they have to have the money available to put them there. So So yeah, you can't set bots up with small amounts of money unless you're using tiny grids, hardly any grids. And if you're doing that, then your bot won't last very long because it's not going to stay within a range very often. So most of my bots would be set up. When I first started it, I was doing bots with $500, and then the more you make, because obviously this is made, since this has been on, it's made 0.14 bitcoins. If we think about the way that it's accumulating you more Bitcoin or Tether or whatever it is, then I could just reinvest that right now. If the market was okay and good, I'd say, okay, I've made $4,000 profit. Let's set up another bot with the profit that's been made from this bot over the last 6 weeks, and it becomes like a snowball effect, really, especially in a more healthy looking market. And I suppose that's why I like them, really. It just, your account balance grows, you have more. This is Bitcoin that's sat in my Binance account now, just sitting there. It's just sitting there. It can be used at any time. It can be sold at any time or reinvested into a bot at any time. It's all there, just waiting to be used. So if I was more confident of the market and certain other ranges, I'd just bang that into another bot. But at the moment, I'm leaving this bot on for the moment. But I'm not feeling that confident about setting up bots against BTC right now, because the overall picture for altcoins is that they are likely to go down anyway, more than Bitcoin. So these ranges aren't likely to look like this for much longer, but they will look like this again. Anyway, I've deviated from the original point, but I hope that made sense. Right. This is only for Patreon members. It is, but every now and then I open it to the public just to give everyone a little taster of what goes on in here, on my exclusive club. And we basically just go through all this sort of stuff. But yeah, it's normally just a private live stream, but occasionally I open it up. John McAfee found Dean in prison cell. Do you mean dead? Well, I suppose he had a good run, didn't he? He had a good run. I mean, from what I heard of the bloke, I mean, he should have died 10 times over. He's a bit of a legend, really, isn't he? Really, for an anti-hero. Really, I don't know what he's classified as, but it's definitely a character. Right, hey man, what's your average target for EOS at the end of the year? So this is a question again which is subject to so much that it's pretty much impossible to say. I made a video on EOS today anyway, so you can watch that. But before, I was looking at EOS in a very appropriate way, right? So we had this downtrend. We came in, the downtrend was finished. We came into a small period of accumulation where we bought it up, and then it started to pump, which is what I expected. And then when it had its first dump after the original pump, we had a conversion baseline cross above the cloud, a perfect signal for an uptrend on a weekly. So I bought more, and then we got that, and then my first sell target was met here, which was the candle body tops from over here, and then we just died. So what I was saying this morning in that video is that this is pretty much over. Clearly, you don't need me to tell you that. And now the only thing we can do is wait for it to bottom out again. And the only place that we can think about it bottoming out is where it seems to have had a very strong support for a very long period of time, around about $2.20. And we can have wicks down below there, that's fine, but more or less $2.20 is where it's been held. And you could look at perhaps maybe buying it there. Now, to think about it where it's going to be at the end of the year, I mean, if it wasn't for the market dying off like it did, this was heading up to its previous all-time highs. There would have been no problem. It would have been no problem. We had a resistance, broke down, we broke out of the resistance, turned that to support. I was expecting this to carry on with this fashion and be supported around here, and then we would have carried on with that kind of behaviour. But things don't always work out, especially in crypto. You can have the best looking chart with nice rhythm to it, but if Bitcoin doesn't want that anymore and decides it wants to bring the entire market down, it'll do that, and that's what happened here. So I was making videos on EOS saying, look, all-time high, it's on its way, and it would have been on its way if it wasn't that bloody Bitcoin doing its thing. So I suppose it's something that we used to say a lot. which is you can have the perfect setup, the perfect signals, you can have perfect entry, you can have perfect targets on any altcoin, and if Bitcoin decides against it, it's not going to work out, because Bitcoin controls the market, and then some people control Bitcoin. So this is the problem you're always going to face, and EOS has been a horrendous victim to that, as you can see. So for me to now say that I think we're going to reach an all-time high in by the end of the year is basically that's hopium, because I buy things and trade things based upon signals, and there's no signal here. And so if there's no signal for a buy, and all we see is a devastating collapse, the only thing that we can think about doing is buying it based upon its previous lowest level of support, which is down here, and hoping for the best, really, or hoping for a new signal to be generated, whether it's on a daily or a weekly. Don't think we're going to be getting any of those buy signals on the weekly anytime soon. I mean, this one that we were waiting for, I've been waiting for this one. I was waiting for this one for months, and it was good. I mean, it worked out, but yeah, I was waiting for that one for a very long time. If we're going to wait for something like that to happen again, we'll be waiting maybe for the rest of the year, if not longer. So, but that's just that signal there. It doesn't. That's not. I know that they're going to release an exchange, and that will help the price. But to give you a target for the end of the year, given what I'm looking at right here, I mean, the target could be $2.20. I mean, it could. It definitely could. You can't buy something unless you want it, based upon its previous supports. Just literally saying, okay, this is low, I'll buy it here. This is strong, I'll buy it here. But it's not a buy signal. This is just, okay, I'm catching a knife based upon, very long-standing level of support. But it's not a buy-in signal. It's an educated guess as to where the bottom could potentially be. Doesn't mean that it's going to moon straight afterwards. There's no signals on it, so I can't give you anything tangible to hold on to, I'm afraid. Any day is good for me. That's cool. Monday, okay. Monday would be fine. Yeah, so we can see the start of the week, definitely. Thank you. I've been using bots for a while, but I must just be impatient. I think the longest I've had a bot on was about 3 days. Right, okay, so yeah. Yeah, bots are, like I say, if you think about it, it's not like trading normally. You're trading a range, and you let the bot make the most of it. So that bot that I've got there, that's been on for a long period of time. I do use another platform which is free, called... I've forgotten the name of it now. Pionex. It's like an exchange, and they have lots of different types of bots on. You can set bots up on there called Infinity Grid bots, and they're designed to have for a very long period of time. But if you want to learn more about bots, I've got a whole playlist on my YouTube about bots. Showing you, I suppose, how to use grids and different ways to set them up. So if you're interested in learning more about bots, you can have a look at those videos there. And I think they're all the Bitsgap ones, but there are other ones in there too for Pionex. It depends how far you want to take it, how much money you've got. If you haven't got too much money, then probably Bitsgap you have to pay a subscription for, and Pionex might work out better for you. But have a look at the videos, and maybe you'll get something out of it there. There must be a couple of hours worth of bot tutorials in one way or another. How do you take out the profit the bot has made? I don't need to take it out. If you think about what it's doing, so this is Bitsgap is linked to my Binance account through an API key. So all the buy and sells are done in Binance, and this profit here is just sitting in my Binance account. So if I wanted to, I could just go to Binance manually and sell, that, for that's what it would be at the moment. So I could just sell that if I wanted to. It's just sitting there static. It's not doing anything. It's instantly released. It's constantly getting released. Every time there's one of these reds, which is a sell, a little trickle of Bitcoin goes into my overall balance, and that's all this is doing. Bit by bit, small trickles of Bitcoin appear like magic in my Binance account, and it's for me to do what I want. I could transfer it to another account. I could sell it to fiat. I could send it to Coinbase. I could do anything with it if I wanted to. It's there for me to use. It's instantly released. It's basically just, that's the goal of the bot, is to make this thing called bot profit, which is a additional Bitcoin outside of the original investment that I put in. So it's for the long term. That's what I like about these bots. I mean, I will continue to use bots and stack up Bitcoin. I was hoping, even in this downtrend, or sideways is what's best. Sideways price action is definitely the best for bots, because you can go up and down and up and down, up and down. Hopefully, the best bot would be if you could find a range that just went up and down forever. That's bot heaven. And I'm just hoping to accumulate as much Bitcoin, as possible, and hopefully throughout the rest of this year, if I can continue to use bots appropriately and establish these ranges, I will do, because my expectation is that Bitcoin will recover one day. And the idea is I just want to turn, as much Bitcoin as possible into more Bitcoin. And some people like to stake. It's nice and easy to stake, but locking stuff up, at least this way I've got control over it. And yeah, I mean, I'm quite lucky as well, because I've got an upgraded Binance account, so I get I've got a link to create new Binance accounts with, which gives 20% back of your trading fees, and so I get reduced. If you used that link, you will reduce your trading fees by 20%, and if you have BNB in your account, you reduce your trading fees by a further 20% or 25%. So it's basically half price trading fees, because you can see there's a lot of transactions going on here. They're all very small, but overall it's added up to quite a lot of transactions. But if you think about what it is, I mean, you can almost split that in half, because I've got the upgraded account. I used the link. Yeah, you could use the link if you wanted to. It's in the description somewhere in the videos. And you'll get 20% off all your trading fees as well. But if you have BNB in your account as well, essentially you're getting close to half price trading fees. So, but this profit here is profit that's been accounted for from the trading fees. So the trading fees is not part of this. This is real profit that has been made, that's sat in my account right now, and I can do whatever I want with it whenever I want. Right. I'm all in XRP, and wait, fair play to you, fair play. I think people who hold XRP, they go through a rough time, really, and I see it when I make these videos on XRP, because I normally make a video on XRP before it pumps, right? And people call me all kinds of names. Oh, you idiot! You bought the top scam coin, blah blah blah. But then it goes on to pump, and then then people then start saying to me, what's a good entry point for XRP? And I'm like, oh, well, it's when it's down on its ass is the best entry point. So buying it now is dangerous, because it's going to come back down again. That's what it does. So I'm pretty confident that an XRP position is a relatively good position to be in. Do you know what I mean? But it doesn't feel like that for a lot of the time, because the pumps are savage and the dumps are savage as well. I think we'll get the last laugh. But being all in on one coin, I have to say, probably a little bit much for me, especially in what we're looking at right now. I heard in one of your videos that you did a quick trade from 28 and exited your position. We go right. Yeah, I did it. I did do. I mean, I had spot hole entry points of about 28,600 or something like that. So that was one of my main sort of last areas of this zone, and that's been planned out for a while. So yeah. I suppose, long story short, we've got. This could be an accumulation range, and we've got an inside range and an outside range. That's the top of the outside range, that's the bottom of the outside range. This is the inside range, where most of the price action is going to take place, and it has been for obviously weeks. As you can see, there's a weekly chart here, but I have had this mapped out for a while, because we've had wicks down here in the past, and this if we come down here, we should springboard, and this could be the bottom. And I did also do a long position, but I don't really talk about those. I've been talking about it a little bit on this live stream, because derivatives have ended up being a friend of mine throughout this volatility recently. But generally, I don't really do it. But yeah, the spot holds that I'm buying in these zones are spot holds that I intend to hold for the duration of the downtrend, wherever it goes to, all the way back up to the uptrend. It's dollar cost averaging, so that's a different strategy to the one I did, the derivative or the leverage trade that I did. I did take a long position. It was around about 29,000 or 29,500. It was a very short, small trade. Because I've been waiting for this for a long time, you see, so I was pretty confident that we will get a good reaction from here, and we did, but we're being rejected from it here. So do I expect it to come down? Long story short, probably, yeah, but the inside range and the outside range is still where the majority of the price action, in my opinion, is going to take place. Unless we break down from 28,000 and then end up sort of, I suppose, being rejected from it, then we're gonna have to talk about a bear market, and we're gonna have to add some more lines to the chart. But in a long story short, and most people have heard me say this at the beginning of the video, but this is the death cross that counts, the exponential, and we also have a short signal on the Ichimoku cloud. So I mean, all of this is looking pretty bad, for further continuation down, and it could spell bear market. Also breaking down below 33,000 on the weekly chart, which is for me also a bear market territory. So at the moment we're holding above here. This is candle closes, by the way. $33,000 we have to close candles below there on a weekly. So we've got all the way till next Monday for that to happen. So plenty of time. We can have wicks down there. We can, as long as we're closing at it or above it, I'm okay. But we can see in the past how well this green 50 exponential moving averages has shown us that bear markets are very likely when you go below there, especially when you go below there and get rejected from there. It's pretty much done. Break down here, close below there, done. We did have a couple of instances recently, as in like 2019, 2020, where we went below it. But if you believe in the 4-year cycle, which is dictated largely by the halving, these aren't as concerning as it would be over here, because this looks more like a bubble pop or a large overextension, which lends itself to a bear market, than it would have done over here. The odds are very much in our favour that we will, even if you were buying below here, or if we came down below here, there's a lot less of to go to this 200 exponential, where we should get picked up, than there is right now. This is almost 50% difference, which this wouldn't have been. So long story short, I do expect perhaps maybe further down, but I'm not going to entertain the idea of a bear market yet. But there are certain other precursors that will confirm that to me. Right, let's have a look. Maybe we'll call it a day, and I can go and see, check the rest of the football that's on. We're live, mate. We're live. If he killed himself, that hopefully he's just faked his own death, and it'd be sad to see such a character to disappear. Okay. What are some of the coins that I've covered? Do I cover anything you want me to cover? But we're running towards the end of it now, so I think we'll leave it at that. But if you do want to, if you're a member of the Patreon, then obviously I'll see you again on Saturday. If you're not, you can join, and it's £7.50 a month, and you get 2 live streams a week. But yeah, it's up to you. So what's this one? Not that many. But I think you can see them. Alright, I've not covered that many. Normally I cover lots, but I think with the overview that I've given, and also with the environment that we're in, and also with my normal YouTube channel, it's all out there at the moment. That there's, for altcoins specifically, which is a large part of what we cover here. Most of what we're thinking about here is this. This is the Bitcoin dominance chart. This is how I expect it to play out, roughly, right? Which is, it's going to the dominance chart, whether Bitcoin goes up or down, the dominance chart will increase. Bitcoin will keep more of its market cap than altcoins in general, and the best we can hope for is a rejection around 52% dominance, with a small rally of altcoins around then. So we can entertain the idea of buying into some altcoins again, just for a relief rally or a miniature alt season. Which could be significant, especially for small cap coins. And we don't buy them blindly. We look at the charts, we look at where they've gone down to, and we see if there's any supports down there that make sense. And it would just be a relief rally. But that'll be short-lived, and I think the Bitcoin dominance chart will end up breaking out of this resistance and going up to a more tangible area, around about here, 57-58% dominance, where we might receive a real alt season once the market begins to recover. And if we think about the time frame here, we're talking all the way till October before anything significant and long-standing kicks in for altcoins. But this doesn't look like much. But if this did play out similar to this, the closer we get to this zone here, this is where we get extremely excited. And I made a video about this the other day. This is where we can turn, you know, 0.1 Bitcoin into a whole Bitcoin relatively easily through planning ahead. And this is, I suppose, where we will start to really focus in on some of these altcoins, probably all of them, to be honest with you. But the biggest gains will be some of the ones that have had the biggest losses. But it's a long way away now, and the idea for me personally at this point now is to collect as much Bitcoin as possible through any means necessary, whether that's dollar cost averaging on the way down, using bots, you know, on the sideways action, maybe flipping, you know, just in situations like yesterday where it was pretty obvious that there was going to be some bounces. You know, just collecting Bitcoin as much as possible, because it's Bitcoin, unfortunately, that's just going to generally outperform everything else, whether it goes into an uptrend or a downtrend. You know, you're going to be in a safer position or a less painful position in Bitcoin. And then come October, generally speaking, I would expect that to flip again. And then you can, well, like I say, I mean, we saw what happened in January. We'll be seeing something similar to January, I would expect, around October, maybe November. But it's a long way away. Until we reach these levels of resistance, we can't really entertain the idea of any alt season, because this is how we determine an alt season. We don't just go and hope for the best. Alt season's coming around the corner because Bitcoin moved up. That it's not really going to work like that. Bitcoin moving up or down is not going to trigger an alt season. But the dominance chart definitely is a very good indicator to suggest when the next alt season kicks in, and it's alt seasons which make all the difference. Anyway, I'll leave it with you there, but yeah, like I say, if you enjoyed that, join the Patreon, and if not, probably once a month or so I'll do one of these freebies for everybody. But generally, I hope you have a nice evening, the rest of you, and I'll see you all on Saturday. Thanks for watching, and take it easy.